Hello and welcome to day 2 of our rolling coverage of the World Economic Forum from Davos. Top of the show, we are going to take you through the PW Survey, Global CEO Survey, which is an annual feature here at the World Economic Forum. In fact, we spoke to PwC's Global CEO Bob Moritz as well as its India chairperson Sanjeev Krishan on the key findings of the survey. There's an interesting dichotomy here. While optimism has doubled among CEOs worldwide, they also see severe threat to their businesses and they are not sure how long their businesses can survive because of multiple threats induced by the rapid advancements in technology and climate. Here's a snapshot of our interview with Bob Moritz and Sanjeev Krishan. Economic optimism has doubled among CEOs. But at the same time, almost half of CEOs don't believe their businesses will be viable in a decade because of tech and climate pressures. So take us through that. On the one hand, they're optimistic, but on the other hand, they're not sure they will survive.
Yeah, so let's get factual for a moment, if I can. They're more optimistic than they were last year. So let's remember that last year you had rising interest rates globally that no one knew how high they go, how long it lasts, and how steep the curve would be. You had inflationary pressures, not only with talent through the Great Resignation, but also through commodities and other goods and services. That was inflationary beyond expectations. Today it's a little bit more controlled. You also had the issues of geopolitical risk that was very uncertain at that point in time and how wide scale it potentially could be relevant to supply chain because of food and energy. So those factors are a little more certain today that give people confidence on the macroeconomic environment, hence the reason they're confident on the global economy being better than what it was last year. Now, having said that, they're actually less confident in their ability to grow revenues in the next 12 months. And that's an important factor because they see this slowing economy for the factors I raised, and they see a pressure on them to identify how can I raise my revenues? Can I change prices? Do I need new products and services? Am I going to compete? And I compete usually on price and quality. If I don't have that right, I'm going to lose. So you do have this concern that is very much associated with the longer term agenda that we talk about. In the longer term agenda, they see some really big challenges. They see implications relevant to generative AI, not today and tomorrow, but in a big way over the next 10 years. They see climate in a big way over the next 10 years. You see regulation continue to be a requirement. So all of those things are building up faster, bigger, and when combined together, cause a significant amount of external concern. And unless organizations are fast and changing radically, they won't be viable as a result of that changing environment.
Right. Sanjeev, Bob gave us the global perspective. Give us the India CEO survey perspective. I mean, does it mirror what the global counterparts are saying, or are Indian CEOs slightly more bullish? Because that's the sense I get when I speak to CEOs from India.
Well, certainly more bullish.
Give us the statistics.
So if you look at the next 12 months, 86% believe that they will do better. And if you look at over a 3-year period, 94% of them believe that they will continue to grow revenues. So in a way, a bit paradoxical, because globally, across the 4,500 respondents, they possibly believe that their own businesses will grow slower, but Indian respondents believe that their businesses will grow faster. The good news also is that they will do it by generating more employment.
Now, just like yesterday, we continue to bring you some of the biggest global voices from Davos. Coming up first then is Juvencio Maetzu, the Deputy CEO of the Inca Group, which runs IKEA stores worldwide. He spoke to us about why he's bullish in India and IKEA's plans to expand here. Your investments in India. So far, IKEA has promised, I think, 10,500 crores of investments into India. Tell us about that. Is it on track? And also your plans to double local sourcing. So how soon before we start seeing IKEA manufacture in India?
Thank you, Chandra, on this cold Davos, that sunny and beautiful day. It is true, but it's not only promise. We have delivered. We made an agreement some years ago to invest 10,500 crores. We have invested already. And then to achieve 50% gender equality, women-men, we have achieved. So we are really, and to do 30% sourcing, we have achieved already now. So up to now, all the step number 1 has been achieved, which is to prove that India love IKEA and IKEA love India.
Inflation has pushed up the cost of raw materials. It's also hampering purchasing capacity of consumers. How are you navigating through this? Can we expect price cuts? Can we expect a rejig in your product portfolio? More mass products compared to premium ones?
We have good news. We are lowering the prices all over the world, and in India we are now going to reduce prices.
Oh, when does this kick in?
Yeah, it's coming, and it will be implemented in the coming weeks. More up to 20% price reduction in more than 250 articles. You know what is the good thing? We have a long-term vision, which is to create a better life for the many people. So we have a really long-term approach in everything we do. And the times we're in, with high inflation, with high interest rate, people are struggling to come down to the end of the month. That's why we need to side with the many people. And we have decided to be the yellow fish against the current and to invest in lowering the prices. Because lower prices and sustainability, good for the people, good for the planet, is exactly the way forward we are.
From one global voice, moving on to another, we bring you Ling Hai, the president of international markets at Mastercard. He spoke about their plans for India, why they are big on SMEs, and also if card innovation has kept pace with other forms of digital payment.
Especially in India, is this K-shaped pattern that we're seeing in the economy, and I think that's also getting reflected in different parts of the world, where the level of affluence is going up. So on the one hand, the number of affluent people are going up, but there is some level of inequality. But how does this play into your plans at Mastercard? It's a good thing, right, if the level of affluence is going up in many markets?
Well, first of all, I will say Mastercard is a global network. We are here to serve all consumers. It's not one segment of consumers versus the other. So that is one thing I want to talk about. But the second thing is, I think you actually hit on the point, which is what a lot of the countries are doing, but also in particular India. That is, you need to make sure the rising tides raise all boats and you don't have this tremendous disparity. And I think the key to that is really the SME segment. We may talk about that as well in greater depth. But in the end, you look at what India has done, right? The whole digitization efforts, the financial inclusion efforts, is meant to address this issue about the haves and have-nots, to give equal access to digital means of conducting transactions and carrying on life. But the whole thing around financial inclusion, SMEs are so important in India, right? They're a big contributor to the GDP growth and exports. So the way that we are actually now working in India in terms of making contributions, making investments in terms of addressing the SME segment, I think is going to address the issue you talked about. It's not going to be the only solution, but it's one of the solutions. But in the end, I think that is going to benefit all consumers. Guess where the affluent customers come from? A lot of them started as SMEs, right? Small business, and that's how they build their business and build their wealth. So it's actually really important.
Tell us a little about that. What are your plans, for SMEs? How are you engaging with them?
Maybe first I talk about globally. This is a very important topic. We actually set out a goal like in 2015 to talk about bringing 500 million consumers into the formal financial system, excluded individuals into the formal financial system. We accomplished that objective by 2020, and now we have raised the overall goal to 1 billion. So adding another half a billion to achieve 1 billion financially included individuals by 2025. Now, in addition to this number, there's also 50 million SMEs. So that's the SME bit. And there's also 25 million of women-owned businesses. So in terms of the efforts, and I'll bring this to India. So there's several levels you look at, right? In terms of how you actually help SMEs. Some of that is really around education, financial literacy, help people understand how to run a business, how to look at a P&L, a balance sheet, right? So we have this effort in India called Strive India, which is really meant to give entrepreneurs the right tools and education and help so that they can actually run a business.
Now, how are businesses handling digital transformation induced by AI? Is AI top of mind for CEOs, and what's their AI strategy going forward? To answer all that and more, we spoke to Nigel Vass, the global CEO of Publicis Sapient.
what are the 1 or 2 trends that you see taking off in, a 1 to 2 year timeline in terms of transformation? Because even when we talk to people in AI, they say it's really too soon to determine which way this is going to go. Even the impact the generative AI is going to have on enterprises very early in the cycle. So, in such a scenario where you're seeing the pace of transformation evolve so rapidly, how does one really craft a strategy? Because you're crafting a strategy and tomorrow something can be launched and, your entire strategy might go for a toss.
But, I'll give you an example of, I think, how companies have benefited already now, right? There are some core fundamental building blocks that are enablers to AI, no matter how this conversation goes. So often when we're talking to companies and folks say to me, I need to talk about my AI strategy, right? My first comment is, let's talk first about your data strategy. So let's understand where the underpinnings are, because if you've actually established a really solid foundation to ensure that every aspect of your organization's data is being harvested, you understand how to train models using it. We were doing AI for clients 10 years ago in machine learning and then predictive AI. And now, of course, we're talking about generative AI. But the fundamental building blocks of how you use your data, how you establish models, how you develop test and learn cycles, we often talk about these capabilities as speed capabilities, and speed is an acronym for strategy, the S, product. So moving from projects to products, the E is experiences, and the next E is engineering, and then the last is data and AI. So this idea of the speed framework, we think about them as fingers on the hand. And I often say to people, look, it doesn't matter what you're trying to lift and shift or move or pick up. You need all your fingers functioning together, right? And, if you don't have 1 or 2 of them working with the others in concert, it doesn't matter what you're trying to lift or shift. You're still going to struggle to move something from point A to point B. And that's, I think, where we are with AI. I think now with generative AI, you're starting to see creative industries.
One defining feature of the AI era is the battle for chips. What should India's strategy be when it comes to chip supremacy? Are we doing the right thing in subsidizing chip making, or should we focus on design? To answer all this and more, we have Chris Miller, the author of Chip War. Do you think a stage is being set for an AI arms race between nations?
Well, I think it is the case that AI is already being deployed for defense and intelligence uses by basically every major power. And this isn't science fiction. This is happening today. The question is, how do you best regulate that? How do you best control these dynamics? And I think it's really questionable whether the leading powers can agree on rules of the road. There will be a lot of trust questions. Even if you were to write down rules, would you trust your adversaries to follow those rules? And as we found in the nuclear sphere half a century ago, that it's very difficult to develop control regimes for these types of rapidly changing technologies.
Right. You told us earlier that your book, Chip War, materialized when you started researching on why Russia fell behind in technology. What can emerging global powers like India learn from Russia's experience?
Well, I think the key is to focus on developing profitable companies that can keep investing over time. Governments play a role. They help catalyze the ecosystem in its early stages. They provide a context in which businesses can invest. But ultimately, you need successful tech firms that make money and can grow and become world leaders.
Moving on from global voices to Indian voices, we bring you Amitabh Chaudhry, the CEO of Axis Bank, who spoke about the credit cycle and also how RBI has cracked down on unsecured loans and what impact this will have going forward. We're in conversation with Mr. Amitabh Chaudhry, the CEO of Axis Bank, right here at the World Economic Forum. So thank you very much for talking to Moneycontrol. Mr. Chaudhry, we are finally seeing some signs of economic growth revival on the ground, yet there are concerns on external risks that could upset the recovery. What are your views?
Well, India has been doing quite well as far as GDP growth is concerned. I think the first 2 quarters were better than expectations. And I think what we expect for this year is a pretty healthy growth for India. And I think that momentum will continue into the next year. Maybe it could come down a bit, but still the momentum will continue. What you are, I think, referring to is the revival of private capex. I think, yes, we are seeing signs of some revival happening across various sectors. Earlier, I think people were a bit concerned about post-COVID. Then we had the Ukraine-Russia thing blowing up. So I think there was a global macro which was worrying people. The capacity utilization now have reached at a level where people have to start investing in capacity. We saw a lot of consolidation in various industries. That story is also almost getting over. So now the entrepreneurs are willing to look at investing further for higher capacity addition. And I'm not saying that's a barometer, but if you look at the kind of announcements which were made in Vibrant Gujarat in terms of what some of the large investors have gone and committed, I think the numbers are quite large. So I think it's just an indicator that things are reviving and moving in the right direction. And I'm quite hopeful that with the current government dispensation, how they're going about things, how the regulator is managing the inflation and interest rates, overall the economic outlook looks promising.
Away from IT to the world of startups, we caught up with Sriharsha Majeti, the Group CEO of Swiggy, who spoke to us about his IPO preparations, what he's learned from other new age companies that have listed in the last 2 years.
In terms of the competitive landscape, how is it evolving? There are, of course, two clear players in the food delivery space. What the market share is something that, gets reported, but we don't know what it is. But do you believe that the gap has widened between Zomato, Swiggy? Are you both at par? How do you view the competitive landscape?
No, I think we are in various categories and we don't comment on share numbers in any of these categories. But I think it's all the spaces that we are in is competitive, never a dull moment. There's so many more developments happening even in food delivery with ONDC, etc. So I think you have to keep inventing on behalf of the consumer.
2024, will we see you listed?
I don't have anything to offer on the IPO at this point. As I mentioned, it's an aspiration. We've been preparing for it, even if you remember our 2021 interview. So we've added independent directors to the board, made the early...
Appointed bankers.
Yeah.
From Axis Bank to the world of IT, Mohit Joshi, the CEO of Tech Mahindra, in his first interview after taking charge, spoke about his plans to turn around the company and achieve industry-leading growth.
So what are your priorities going to be in 2024? You've already announced, I think, a reorganization of sorts, but what are your plans going to be going forward?
In a very successful company, but the org structure over time needed a little bit of streamlining, and we have done that. Moving forward, what we're working on is we're working on a plan for the revenue. What are the sectors we focus on? What are the markets we focus on? How do we build the next generation of service lines? How do we utilize fully the promise of AI? We're working on a plan for margins. How do we drive greater productivity? How do we make sure that our margin profile, is competitive with our peers? And then, most importantly, I think we're working on a plan for the organization. How do we build a learning organization? Tech Mahindra historically has invested very heavily in training and learning. How do we get the benefit of that? We've hired a really impressive chief marketing officer to, build our brands. These are all exciting things that we're working on. A plan for revenue, a plan for margins, and a plan for the organization. Again, given the strengths of the company in terms of the talent, in terms of the client base that we have, in terms of the group support, there is no reason why we should not be the best performing organization. Our healthcare and life sciences business, our retail and logistics business, again, at $6.5 billion in revenues and 150,000 people, we do have the luxury of being good in more than one thing.
And finally, we end on a festive note. We visited the Tamil Nadu pavilion today for a taste of Pongal, the festival that's being celebrated in India. Here's a listen in to what the TN Industries Minister had to say. We're in conversation with the Industries Minister of Tamil Nadu, TRB Raja sir. Thank you very much. Happy Pongal. And thank you for the Chakra Pongal right here in Davos. You're just coming off a 2-day global investors meet that brought in, I think, 6.64 lakh crore in proposed investments, along with 26.9 lakh prospective jobs in Tamil Nadu. What are your expectations from Davos? What's your pitch to investors here going to be?
Our Honorable Chief Minister, when he initiated the idea of the Gym 24, the first thing he told us was, he didn't talk to us about the investment number. What he spoke to us about was the kind of jobs that we're going to create via this gym. And this gym, as you've heard, and I'm sure we've met we've met quite a big amount of waves all over India and abroad. A lot of foreign investors have come in varied sectors, and a lot of high-end jobs have been created. Now that has carried in, and since yesterday here in Davos, there have been so many walk-ins, people walking into the Tamil Nadu pavilion. Everybody's seeing us got a very good location this time around, and we've heard at least 3 major clients, 3 major investors coming in and saying that, hey, I mean, you guys did this, Jim, and we heard this went this way, and so many of our regional heads who came there met up with other clients, prospective clients there. So we're looking at expanding into Tamil Nadu in the near future. So these kind of talks at such short notice, that I think is the result of a fantabulously well done, well managed global investors meet under our chief minister. So our chief minister's overall goal, aim of creating high-end, high-value jobs for the youth in Tamil Nadu, and creating jobs for the rural women in Tamil Nadu. You know, taking growth to all corners of Tamil Nadu. That's his focus. He's been talking about distributive growth all this while, and that's what he is delivering on.
That then brings us to the end of this bulletin, but we will continue our rolling coverage of the World Economic Forum right here from Davos for Moneycontrol.